December quarter results of AC companies exhibited mixed industry trends. Blue Star and Amber delivered a very strong revenue growth, while Voltas witnessed a decline in sales despite normalization of economic activity. Let's take a closer look at each of these companies' financials. Blue Star posted a strong revenue growth of 34% year-on-year as both business verticals, electromechanical projects and unitary cooling products surprised positively. Management attributed strong growth in room ACs to new launches and distribution expansion. Do remember, volumes were up 28% YOY versus industry growth of 25%. The company continued to gain traction in industrial, healthcare and pharma segments, and it also improved its industry ranking in chiller products through market share gains. Commodity prices, however, impacted operating margins, which were down 130 basis points YOY. To expand its footprint in both domestic and export markets, Blue Star plans to set up new AC and components manufacturing unit at Sri City in Andhra Pradesh. Construction of the new factory is underway and the plant is expected to be commissioned by October 22. Going forward, Blue Star will be making further investments in the sector as the PLI application for sheet metal components and heat exchangers has been approved by the government. In contrast, Voltas reported a mixed Q3 result as the company grappled with issues such as COVID third wave, unabated rise in commodity prices and increased competition intensity in a seasonally weak quarter. Although the UCP segment reported modest revenue growth on a high base of last year, Voltas maintained leadership in the segment with a market share of 26%. Engineering products and services were stable owing to revival in capital equipment demand, but EMP business suffered from execution challenges and reduction in order book. Cost control measures and operating efficiencies helped Voltas maintain its operating margins in an inflationary market environment. Management expects consolidated margins to bounce back to 11 to 12% range over the medium term. Amber's Q3 performance was mainly driven by the components and mobility solutions business, which grew 70% YOY to 598 crores. Meanwhile, the revenues of the room AC segment declined from 413 crores to 376 crores due to a drop in sales volume. Under absorption of fixed costs due to commencement of 3 new production plants impacted the cost base and dragged the margin profile. During the quarter, the company onboarded new customers including Samsung, Voltas Beko and Boat. The business continues to expand its product offerings through mergers and acquisitions. Recently, Amber acquired majority stake in PR Automotive Technologies, which is a manufacturer of cross-flow fans and plastic components, and Pravartaka, which is an injection molding tool maker. Capex for FY23, meanwhile, is estimated to be around 350 to 400 crores, as the company has already received approval for 2 PLI applications made for RAC components. Ramp-up of new greenfield facilities, import substitution, commencement of exports and growth in commercial ACs will continue to be long-term catalysts for growth. Muted demand post-festive season and spike in Omicron cases impacted consumer sentiment and trade volumes in the room AC segment during November and December. Since disruption from the third wave was very benign, industry participants expect business volumes to regain momentum from end of February. Although the quarter witnessed divergent results across various business segments, the long-term outlook for the sector looks very promising due to evolving consumer lifestyle, increasing income levels, rising temperatures and low penetration levels of ACs. Voltas and Blue Star continue to trade at elevated valuations, which seems to factor in a majority of the positives. Investors can look to accumulate Amber Enterprises on correction as the business has a long runway for growth in the domestic and international AC markets. Amber is gradually expanding its components business, which presents a high growth opportunity in the electronics industry. Now, the government's push for local manufacturing and import substitution augur well for the company and should help fortify its position in the sector over the medium to long term.